The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Right now, we have the S&Ps up by 17 points. We got some inflation data this morning. The market's recoiling from the lows of yesterday. Oh, we need my chart. Shame on me. Here we go, Al. It's coming. And we got the markets in positive territory to kick off Friday action. And there is that chart. S&Ps on that inflation and consumer spending numbers. You spiked to a high right now of 66.90. We've backed off a bit. You're trading at 66.76 right now. That's a gain of almost 0.3%. NASDAQ 100, you get a little acceleration. We'll jump over to that economic news in a moment. PCE inflation up by 2.9%, basically in line. Core inflation up by 2.7%. The market likes that inflation is in check. You get a little bit of acceleration. You back off a bit. We're almost right where we were overnight. NASDAQ 100 up by 0.2%. Dow up by 0.4%. Up 203 points, 46,473. And the Russell up by 2 this morning. We jump over to yields in focus on some inflation data. You see the little volatility, but no real move. They come in pretty much in line with expectations. You jump over to the dollar. Dollar, quite a couple days, Wednesday, Thursday, up to 98.60. We're giving back some of those gains. Dollar, off by 292 ticks right now. You jump over to that gold contract, holding up well, right? In the face of all that strength, gold pushing almost 3,800. We're up by $18 at 37.88 right now on the session in gold. And how about silver yesterday, too? Continuing the push. Silver up another 63 pennies or 1.4%, 45.75 in silver. Watch that gold and silver contract on Friday. As we know, Fridays in that gold market. All right, inflation numbers. Core inflation rate, 2.9% in August, as expected. So the personal consumption expenditure, which is the PCE, gained 0.3% on the month. The headline number was 2.7%. If you take out food and energy, which is core PCE, that's the Fed's preferred inflation gauge, 2.9%. Pretty remarkable, the conversation about cutting when we were at 3%. So much for 2. We're at 3. Headline inflation rate, slight increase from the 2.6% in July. Well, the core rate was the same. Core rate stuck at 2.9, and you actually have an increase in the headline number. Personal income up 0.4% for the month, and the PCE accelerated at a 0.6% pace. Both were 0.1 percentage points above their estimates. And I love this comment from CME. It's a rightful comment. Though the Fed targets inflation, do they target inflation at 2%? Do they? Though they target inflation at 2%, the readings are unlikely to change the course for policymakers, who last week indicated they see 2 more quarter percentage point reductions before the end of the year. It's like, although they're committed at 2%, and we're not even close to 2%, we're at 3%, the Fed is now on a cutting path. Well, we'll see where those jobs come in, man. Because if the jobs ever come in strong, why are we cutting, right? The whole conversation is about the jobs, right? The BLS head gets fired, talking about that in there, in the Tiger's Den, rightfully so. The revisions to jobs numbers, the 3-month jobs average, you're talking about 22,000 jobs a month. And yeah, we're now at an area where everything else is fine. We'll see if the jobs recoil. And that September employment number, it's going to be an important one. Now that was inflation, and you jump over to consumer spending, beats estimates. And there are all the numbers that we just talked about. Real consumer spending, 0.4% versus 0.2%. Look at these numbers, folks, okay? Take the jobs equation out of things, and you don't take it out. But that's the only one. Everything else is pointing to a very healthy economy right now, right? Very healthy. You have inflation, you have consumer spending, and on the jobs front, How many jobs do we really need to be adding to be at the neutral number, right? With inflation, with immigration down, etc. Some people put that number at only 50,000, 60,000 to be the break-even number to keep unemployment where it is. We're pretty close to that number. Nonetheless, we have markets in positive territory this morning, and we got to talk a little bit of TikTok. So, this one was out last night, okay? Is that right? Yeah, early this morning, as in almost midnight. $14 billion valuation. It's pretty amazing, folks. He's going to hand this thing to Larry Ellison and Silver Lake Management for $14 billion. And, folks, I mean, you look at it, right? Mr. Beast is going to get a multi-billion-dollar valuation just for his one YouTube channel. And they're going to get the entirety of TikTok for $14 billion. Pales in comparison to previous estimates that put it closer to $40 billion, okay? TikTok in the U.S. alone, I was reading this one this morning, this is just remarkable, has about $10 billion a year in North America, okay? Their U.S. operation, not even North America, I guess. 170 million active users, revenue north of $10 billion a year, and they're putting a $14 billion valuation on it. You want to know what that looks like compared to other tech peers in terms of sales, price to sales ratio? That puts them at a 1.4 times price to sales ratio. And if you're buying a company at 1.4 times sales, you're usually buying low growth companies like Exxon and General Mills. If you want to buy a company like Meta, you're going to pay around 10 times sales. Google is up there at 8 times sales. Amazon is pushing almost 4 times sales. I bet if you break out AWS, it's a different story, of course. But here is TikTok, down here with General Mills and Exxon. They have many quotes in here talking about daylight robbery, okay, and the fact that basically it's quite a negotiation where they say sell or your business goes to zero. And they're going to get that business at $14 billion. And folks, $14 billion ain't that much these days, especially when you have a company with 170 million, actually, was it 170? Is that how many people? Yeah, 170 million active users in the U.S. with $10 billion of U.S. revenue. Hey, so keep your eye on that one. But Mr. Ellison, Oracle, particularly volatile, traded lower yesterday in dramatic fashion. You had some volatility overnight to 283, and we're going to be positive by about $1 on the open. You jump around some of the other tech stocks. Amazon up by a couple bucks. Now we get some tariff news out there as well. Amazon up to 220 from 218. You jump over to Apple shares, slightly in the red to 254. NVIDIA shares this morning catches a bid up to 178 right now. The other chip stocks, AMD, up to about 161 right now. And we checking on the other Magnificent Seven. Google shares up by a couple bucks this morning, and Meta, speaking of, 750 from 748. And yeah, Meta trading at about 10 times price to sales ratio. And they're going to put TikTok at 1.4 times sales. Gotta love it. Gotta love it if you're Larry Ellison. You don't become the richest man in the world without buying at a discount. And he's going to be handed a portion of Oracle at a 1.4 price to sales ratio. They got 120 days to make that happen. Details will come out. It's Friday, folks. S&P's up by 18. We're coming right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps right now up by about 0.3% or 18 points in the green. NASDAQ 100 up by 0.2%, up by 48 points. And you jump back to some of that tariff news this morning. So new tariffs on pharma and big trucks. Levies on drugs will hit companies that are not building plants in the U.S. Starting October 1st, 100% tariff on any branded or patented pharmaceutical product unless a company is building their pharmaceutical manufacturing plant in America. Now, as it points out, many of the largest pharmaceutical companies have announced new construction in the U.S. recently. Other tariffs include large trucks and home goods. Roughly 9 out of 10 prescriptions in the U.S. are filled with generic drugs, which would not be affected by a tariff on branded or patented products as outlined. And yeah, so you're going to see a lot of volatility as many manufacturing plants in Europe and regions outside of the U.S. is where they are right now, even if they're building them currently within the U.S. And then you get into heavy trucks. So heavy trucks brought from outside the U.S., 25% tariff. And yeah, commercial truck manufacturers rely on plants in Mexico to produce heavy-duty trucks for the U.S. market. You get Daimler Truck, North America unit, assembles Freightliner brand trucks in Mexico. Freightliner is the North American market leader in heavy-duty trucks, 40% share of the market. Kitchen cabinets, bathroom vanities, and other similar products get a 50% tariff, a 30% tariff on upholstered furniture. Yeah, and you better believe that's going to hit a certain few equities. You got Restoration Hardware out here. You see the acceleration on that news last night. Now, be careful of Restoration, folks. You see the pain that this equity went through earlier in the year in tariffs. Now we're talking about their bread and butter, where you're talking about upholstered goods, furniture. It's amazing. I think back, we jump around to some of the others, right? Let's see. Wayfair with some volatility last night. Williams-Sonoma down about $6, about 3%. It's remarkable. I think I bought a couch from Macy's Furniture about 10 years ago, folks. Beautiful couch. Bought it from Macy's, and I bought a bedroom set at the same time, and it's taken forever to come. And I ended up almost canceling my order, and the reason why it was taking that long, and this is an amazing story. So maybe not amazing, but you learn something new every day, folks, okay? So what do? I need a new furniture set. I have an old single couch, and I'm looking to get kind of a L-shaped couch, right? And so I'm thinking that I need to sell my couch before I get a new couch, right? So I throw my couch onto Craigslist, I think, or maybe Facebook Marketplace. And amazingly, somebody buys the couch. It was a beautiful couch, right? I'm a single guy at that time, no kids. In terms of furniture, in terms of used furniture, this was a great couch. And they bought it for like $700. And I think I paid like $1,000 for it, right? Like 10 years prior. So I'm like, this is great. I sold my couch. Now I can go buy a new couch and get it delivered, and I don't have the old couch sitting in the living room. Won't be a problem. I go to Macy's a couple days. I walk in. I love the couch. I order it, and they say, no problem. It'll be delivered in 6 to 8 weeks. I say, man, what are you talking about, 6 to 8 weeks? Say, yeah, it's shipped from China. I say, really? I say, yeah, 6 to 8 weeks. I said, all right, I guess I can hang out without a couch for a month or two. The order ends up taking even longer than that. So I go in, I think I say, this is crazy, man. I'm waiting like 2 to 3 months, right? I got no furniture in my house. They give me a $500 gift card just not to cancel it. Ends up showing up. It's beautiful. But yeah, many of these products, folks, when you're talking about upholstered furniture in particular, that would have been a straight away. And there's no way they would have taken that to the bottom line in terms of that type of a tariff. Yeah, kitchen cabinets, upholstered furniture, 50 and 30%. I mean, folks, as somebody that's in the real estate market and the builder right now, you better believe it goes up. Kitchen cabinets, okay? You better believe it. They're all a component that trickles down to the consumers eventually, folks. They're all taxes that are paid by the end consumer. Everything's paid by the end consumer, okay? Everything. If the company's going to eat some profit, they can eat some profit. But it all matters what the consumer is paying on, the final step. All right, jump around to crude. Crude with an acceleration off the lows recently. We're coming up to the highs. You're coming up to the highs of September 2nd, 65.62. Is that right? No, 66.03. Yeah, 66.03. We hit a high of 65.46 this morning for crude, and we jump over to gold. Take a look at some of the volume in gold right now. Yeah, decent action on the bounce yesterday as well. You had the pullback on Wednesday. You do it on lighter volume. Trade higher on volume, and we'll see where today comes in. But gold, remarkably strong in the face of a strong bounce in the dollar. You got to take that one off. You're talking about a bounce of more than 2 full points from the lows right now in gold, holding steady near 3,800. Jump over to silver, making new highs, up another 1.2% for silver right now. You jump around to some of those silver equities. First Majestic up by about 20 cents right now. Yeah, Heckler up by about 20 cents. Jump around to some of the gold equities. Harmony shares, you're going to be up by about 40 pennies. AEM, slightly in the green at about 160. Yeah, Wheaton, jump over to XAU. Just remarkable strength in those gold equities, even with a little bounce in the dollar, but we'll see if that plays out next week. What's going to be remarkable is, the whole conversation with the Fed, it's going to shift again, folks. We're talking about right now, when we come back next week, you got 4 weeks from, is that right? Yeah, 1, 2, 3, 4, yeah. So next Wednesday is October 1st. Okay, next Wednesday is October 1st. So we have 2 trading days left in September after today, right? Opening bell when we come back after the next break. But we got today, Monday, and Tuesday winds out September. October 1st is Wednesday, and then you got 4 weeks until the October 29th Fed meeting. Lower price, higher yield. When we come back, folks, we'll take a look at that yield market. And we got the 10-year right now, 4.18. Coming right back.
As an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Markets, give it up there coming into the opening bell. S&P's up by 12. You have the NASDAQ roll over to red prices. You see the spike on that inflation data, and just like that, you give it all back. Watch out, folks. We're coming into that opening bell with selling, and we're doing it, and we're below where we were at 8:30 now. You get some volume. NASDAQ off by 8 points right now. NASDAQ 100, that is. S&P's up by 10. Dow right now up by 170 points. Great question in the Tiger's Den, folks. Okay, why are interest rates rising? Okay, and, you know, all the pressures on the Fed, of course. We just got a cut. There's another. Right now, folks, in October, the chances they're going to cut priced into the market are about an 85% chance, okay, in terms of them going to be cutting. You go to December, there's about a 63% chance we get 2 cuts by then, okay. 32% chance we get 1 cut. There's only a 3.7% chance that we get no cuts over the next 2 meetings, right? But what's happened here is this is a story of expectations, folks. Okay, it's a story of expectations. When we came into that Fed meeting that we just had last week, the market was so heavy on the cuts. The chairman almost couldn't have been more forceful, and he could have, of course, right? There could have been more dissenters that said we want to go 50. But what happened since then is, you know, folks, look at the numbers that we just came out with this morning, okay? We got 3% inflation. We got consumer spending going up 0.4% on a monthly basis. You have markets at all-time highs, and we have an unemployment rate that's around 4.5%, okay? There is a risk. And then you get tariff news this morning, right? You're telling me that tariffs on all your furniture you're paying for that's upholstered, okay? All your kitchen cabinets, there are inflationary factors that are coming into this market. Now, that's one aspect of things. All right, Paul? Great question in the YouTube Tigers Den. Here's the other side of it, okay? As EKS, our man, is saying in there as well. The Fed controls the 2-year, okay? Here is your 2-year, the ZT. This is your 2-year. Higher price means lower yield, okay? Higher price means lower yield, right? Look where we are. We're at a very high price compared to where we've been the last few years, right? That means that the market is anticipating lower yield over a 2-year period, okay, compared to where we were. You got to go back to really where the Fed was when we were at a much lower interest rate, okay, right? Where we were holding rates near zero for COVID, etc. We hiked them dramatically to 5%, and now the path is that the market thinks they're going to lower and cut rates. So when you look at the 2-year, the 2-year right now has lower yield, okay? And I'm going to pull over just this is your 2-year yield, okay? Right now this morning, we're sitting at 3.659%. So call it 3.66%. And you see where we are, right? That's the lowest yield we basically had going back to when we really, you know, were coming off a zero bound, okay? Now that's your 2-year. But when you pull up the 10-year, okay, and let me look at it on the price chart first, okay? There's your 2-year, and as I talked about, you're right back to where we were, the highs of September of 2024. You're right back to the highs of March of 2023. So September of 24, March of 23. That's where we're sitting right now in the 2-year. Guess what, folks? We're not even near where we were in the 10-year, okay? Because there are many more factors that go into a 10-year yield than a 2-year yield, right? If you know where the Fed's going to be in the next 12 to 18 months, you can make a very educated guess over where you should demand to be rewarded for a 2-year yield. That doesn't play out for a 10-year, folks, okay? No matter what you say about Trump, he does not care about the deficit, folks, okay? This whole deal that we can just hope and pray that we're going to grow the economy, that $4 trillion is not going to get added to the deficit over 10 years, I'm all for hope. It is not a plan, okay? That plan they just passed through is going to add trillions to the debt, okay? Don't ask me. Ask the biggest market in the world, the fixed income market, okay? This market's saying, hey, there's no way we're dropping back to where we were in terms of rates last year as low or in 2023 as low, okay? Because there's a lot more going on in this market right now than when you talk about just a 2-year. And yeah, the 2-year does not control the 10-year. Now, there is going to be pressure on the other side of this, all right? Now, to look where we were, though, as I mentioned, September of last year, right? Look at this. September of last year, the 10-year was at 3.7%. We're at 4.2. That's a full half a percentage point higher, right? You back it up to March of 23, same thing. We were down there at 3.6%, actually lower, right? So we're at 4.2% right now, okay? So you have runaway debt. You have a Fed that's now arguing with Mr. Moran that we don't need to have an exact 2% target, right? Let's give it a floating target. Well, guess what? That floating target is going to be higher than 2%, right? They're never going to say, let's have a floating target and we'll be cool floating it at 1.5%. No, they want to run it hot. Inflation just came in at 2.9%, folks. Consumer spending just came in at 0.4%, okay? Remember the conversations that Chairman Powell saying we're committed to 2%. They're not committed to 2%, right? The moment there was weakness in the jobs market, they've cracked. We're at 2.9, and think about if you had to lend the money government for 10 years, okay? What kind of return would you demand for lending the government money for 10 years? Now, keep in mind that you're only getting 4.18 for the 10-year, and you're getting almost 3.7 for the 2-year. You're only being rewarded with about an extra half a percentage point in yield for going out from 2 years to 10 years. There's a real problem with the deficit, folks, okay? And it's not getting solved by this administration. Don't take that up with me, okay? You know, passing all these budgets, they're just going to add trillions of dollars, okay? The market's paying attention. And yeah, on a mortgage front, this is going to be a battle. And you already see the assault that the pressure is going to be on to bring down the longer-term rates, and there are things that the Fed can do. That's not happening yet. But when you get a new chairman or chairwoman in May, okay, it's going to be interesting to see if they try and talk about a third mandate that has been discussed, right? And keeping longer-term rates moderate, reasonable, whatever they want to call it. And the way they can do that is simply by manipulating the market through quantitative easing. That's it. They can get in that market. They can start buying them, right? They can start selling them. They could determine an emergency. Everything's an emergency these days, folks. These tariffs that are getting done, they're getting done under emergencies, right? It's all an emergency, so don't think it's not going to happen. The pressure is going to come. They're going to try and translate that to the 10-year, okay? Housing is a crisis. You better believe it is. But you can't manipulate the market forever, folks, and that's what they're going to try and do, because the 2 years going down, the 10-year has not followed yet, and we have inflation that could be a problem. We have a runaway debt, and you know, you pass 1 million tax cuts and you don't do it on the other side, and now we have a government that's at an impasse for October as well. So there's a lot of risk when you go out 10 years, right? A lot of risk when you go out 10 years, and guess what? Investors, they want to be rewarded for that risk, just like you or I would. You know, lending the government money for 10 years. Folks, did you hear the government's going to shut down in a week and lay off like 1 million people? That's who you're lending money, government, to for 10 years, right? You think things are going to get rough in the next 7 days when the government shuts down? What about 10 years? Yields on the rise. S&P's up by 28. We're coming back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We've got Intel shares right now up another 2% in the market today, up 86 pennies to 34.85. We got a question in the Tiger's Den saying about 3 batches of Intel from 18 to 21, sold 2 and still have a batch from 18. My plan was the 36 swing area, but given the volume, I have second thoughts. Excuse me, let's see. So, you're looking at this acceleration you got from, just over a year ago, July. And yeah, you got to like the volume we got coming in here. You got, you're buying a company that America now owns. NVIDIA invests $5 billion. I wouldn't get too sidetracked with that $5 billion investment from NVIDIA, though, folks. Boy, you talk about a drop in the hat. I mean, to put that in context, right? NVIDIA shares, okay? I mean, imagine. That's like paying the toll to talk to the U.S. government, like to get a seat at the table. As in, a $5 billion investment for NVIDIA, folks, is about a 20-cent movement in the stock. 20 cents, 20 pennies for a stock that moves $10 to $20 in a week, right? 20 cents is what that $5 billion is. So think about it. The government owns Intel. NVIDIA says, hey, let's throw the government a bone because, man, we got a lot going on with, China, right? Let's make sure the government's cool with NVIDIA. We're going to invest $5 billion into Intel. The government will love that because they now own Intel, a piece of it. Now, so don't pay too much attention to that one, folks, okay? But what I will say is, yeah, I have some Intel on a longer-term basis, double broad. And, I think I'm just stowing it away right now, right? And I got it like a 21 area somewhere down here, right? Probably playing a similar game, not game as you, but saying, risk reward wise, right? This equity, we've got quite an acceleration on a short-term basis. Yeah, this is an area of resistance, man. You just doubled in price, right? From April, you're up 100%. You're up almost 100% from where we were in August practically. But you might blow right through that. And I'm just going to set it and forget it right now. These are shares that are almost free for relative. Now, they're not, though, because you jump over here, folks. And the worrisome part about this is you're talking about a company with $162 billion market valuation. 162. I mean, Intel gets talked about like they're a bankrupt company that's worth pennies. They're a company that's worth $162 billion. And, you know, I'm not pulling for 75 tomorrow, but here's the thing about the government picking winners and losers, folks, okay? It's a great idea in the short term, just like lower rates, okay? That's what's so worrisome about this administration. Everything is great in the short term, right? Oh, yeah, let's have the government buy Lennar. I talk about it all the time. Let's have them buy grocery stores. I mean, they're talking about right now that farmers need a bailout. Intel needed a bailout, and the government shook them down for 10%. Are we going to shake down the farmers? Why don't we shake down the farmers if that's what the whole predication is, right? Shake down the farmers. You give them the funding they need. They're getting hurt by tariffs, and then we'll take 15% of their farm, and we'll be able to feed America. In the short term, that might seem great. In the longer term, okay, controlling market forces is not how capitalism works, and you're seeing it play out. In the short term, it's great. Yeah. So you're going to have some pressure to the upside here, okay? Now, you are a company that's $160 billion, so they got to come with it and make that, you know, valuation worth it. But yeah, at this valuation, I'm just going to hold for right now. I like the volume. You know, we'll see how the volume comes in for September. We've done 2.2 billion shares. You did 2.8 billion last month. We've got today, Monday, and Tuesday left. We're going to basically get above where we were at 2 billion in August of last year. You're breaking above that area with volume, and there's a potential we break above the last July as well. I mean, imagine you're going to take out August and July last year. And I say take it out. Okay, that is the next stop that you're talking about. Exactly. 37.16, the highs there. It didn't have much volume. You know, on a short-term basis, if you're thinking about getting out in the next, you know, swing trade couple months, then yeah. But, you know, double broad, you had a couple tranches in there, right? A couple batches of buys. They were in at 18.21. You got a good position. You know, this one I'm just going to let it run a little bit for myself. And yes, that's a high risk trade, okay? You just, you know, like I'm saying, it's a $160 billion market cap, folks, okay? The $5 billion that NVIDIA put in them doesn't even matter. But yes, the government being an investor in the short term, that's a much bigger component of what's going on with that equity. All right. How about Apple gunning for all-time highs, man? Look at this run. Apple. Look at that weekly. Now, we're not going to have volume, though. Right? You're getting above last week's number. Last week you did 360 million. You're at 269 million right now. Yeah, and the rate conversation's a real deal, man. And I agree. Hey, name a politician who cares about the debt, Darth. That's when I'll agree with you. Nobody does. But the problem is, folks, is that nobody does, right? Everybody kind of champions it, but you get Republicans in power, they just get tax cuts, and even Trump isn't willing to cut the spending. I mean, the things that Trump gets away with in terms of just demanding government ownership of private companies. I mean, imagine if Biden came in, gave funding to companies and said the government's now going to control those companies and control ownership in them. Pretty sure that the right would have lost their minds in terms of the government picking winners and losers, okay? But Trump did it, and the point being, even Trump hasn't made the cuts necessary to balance the budget. And if he's not willing to do it, because he's willing to upend norms, okay, that is for sure, and even he is not willing to make the cuts that are necessary to balance the budget, right? The only thing they'll do is just hope we get some growth that has never happened before, that nobody predicts, that somehow it's just going to happen. And that is a problem. And then you get Democrats in there and they don't want to make the cuts, right? Of course they don't. But they also can't get the tax raises to go with it. It's both sides. Nobody balances it out. I agree. So when you worry about rates, you worry about the 10-year, that's going to be a problem, period. You know, I'm not lending the government money for 10 years. I'd much rather take a 2-year, 3-year, maybe even a 5-year, right? But you go out 10 years, man. Tell me where the debt's going to be in 10 years. Yeah. And then you go out to the 30-year and it's even more pronounced, okay? I was doing those comparisons on the 10-year and the 2-year, folks. The 30-year right now was at 127 last September. Now remember, the 2-year is right where you were last September and right where you were last March. Well, if you bought the 30-year last March, what are you down? You're down 13% if you bought the 30-year, just on capital. You're down 13% because what do you have? You have lower price, you have higher yield across the board. Pay attention, man. I don't think a lot of people know, outside of, great listeners like we have here at TFNN that are kind of attuned to what's going on. Not a lot of people know that as the Fed is cutting, the market's saying, hey, government, get your act together. There's no way that I'm going to lower your yield on a 10-year and especially on a 30-year basis when somehow the guy that's going to come in and balance the budget passes a budget that's going to add $4 trillion over 10 years and everybody cheers. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks, and it is pretty remarkable when you jump at these yields, right? So we're talking about right now, this is the 2-year again. We're at about 104. That's right where we were last year in September, and that's right where you were in March, okay? And each time what happened is that the market got ahead of itself in terms of the amount of cuts that they were thinking was going to come, and a couple times the chairman had to recalibrate. No, we're not cutting yet. That is not happening. right? Market got ahead of itself, the Fed recalibrated. Market gets ahead of itself, Fed recalibrates. But the point being, we are at higher price, lower yield. The 2-year right now has just as many cuts as we've ever had priced in before, right? The Fed, they're ready to cut, more so than ever. And as I talked about, you look at that 10-year, no, we're not even close to where we were in September, which is pretty close to where we were. September of 24, that is, and then March of 23. Had to pull up the 30-year, though. Didn't go to the 30-year. And yeah, you're not even close, right? 127 is where you were, and 134, right? Now, the 10-year is what matters, though, okay? The 10-year is what matters in terms of that's what mortgage rates are based off. But this is a testament to the forces in play with the 10-year, right? This shows you how difficult it's going to be to get the 10-year lower when you go out. As far as the 30-year, and you go to last September, the 30-year was at 4%, folks. 4%. Almost 75 basis points lower. And you go back to that March area, and you actually had the 30-year at 3.6%. We're at 4.75. The 30-year is up 1.15% from that March of 23, at the same time that the 2-year is right where you were. Yeah, 1.15%. And compound an extra 1.15% over 30 years and think about what investors are demanding for their risk premium going out that far. Look at this market, folks. We got higher prices coming at you. S&P's up by 0.5%. NASDAQ 100 up by 64 points. Folks, stay tuned. We got a man, Basil Chapman. He's coming up next with the Tiger Technicians Hour. We got Steve Rhodes live at 11 o'clock, Fast Market at 12, Larry Pesavento, and I'll be back this afternoon. Have a great Friday, everybody. Basil Chapman is coming up right now.